All right. Okay. I am getting the sign that our last panelist is not able to join us today. So it's just the few of us, but maybe just a brief introduction to myself. Hello, my name is Christy. I'm a PE startup reporter. I actually very new to Dubai and the UAE. Just moved last summer. I came from Singapore. Spent nearly 6 years covering the Southeast Asian VC ecosystem. So quite familiar with that market. Middle East is a new market to me, but I'm surrounded by a couple of panelists who do know this region really well. Maybe I just give everyone just 2 minutes each to just get a bit intro, name, organization, and yeah, exposure to this region.
Hi everyone, my name is Murtaza Ahmed. Based here in Dubai. Together with my brother Mohammed, we have a firm called Chilton Street Capital. We're launching a growth equity fund to invest in the GCC. Before this, I was at SoftBank running the Latin America fund out of Miami, and before that, at the Vision Fund based in London. My whole career has been investing in emerging markets.
Hi, my name is Jonathan. I connected to Pakistan because I was for some time the CEO of Daraz Asia. So I spent 4 years in Karachi, actually. I think that's how I'm connected to the conference. I did my whole life ventures. So I worked at Jumia, which is the biggest e-commerce platform in Africa, IPO'd in 2019 at the New York Stock Exchange, was then the CEO at Daraz between Pakistan, Bangladesh, Myanmar, Sri Lanka, Nepal. We sold that business to Alibaba. I then started a health tech company here in the Middle East called Smalneo, which I scaled to Saudi, Qatar, Bahrain, and which I sold to an Indian competitor 3 years ago. And then I started Antler, so on the investing side of things here in the region. Did this for 2 years, recently left. So Antler is a early stage VC fund across the globe, and I built the MENAP fund here. And the way it works is that individuals join a 10-week program that we select normally of 10,000 people, around 80. And then we invest in the top 20 people, 180,000 for 11%. So I did that for the last 2 years, and now I'm building something in the AI space.
I'm Shahryar. I'm the MD for Endeavor Pakistan. We're a global nonprofit that helps companies scale out of Pakistan into the region. We have a sister fund called Endeavor Catalyst. That's one of the most successful later stage funds, mostly investing in the Endeavor pipeline. And personally, I've also run an early stage VC fund focused on Pakistan called Deosai Ventures, sector agnostic early stage investments.
Thank you. My name is Sonia Gokhale. I'm one of the founding partners and general partners at VentureSouk. VentureSouk is an early stage VC based in the MENA region with a focus on fintech and climate right now.
Cool. Let's start off with some numbers. I think VC deal making has definitely cooled this year. According to Magnet, total funds raised declined 29% to 1.5 billion. Total deals, however, were up by 10%. First question is to Murtaza. Look ahead to 2025. Do you expect more market cooling? Where do you see the direction of deal flow, capital raise, fundraising to look like in the coming year?
Gosh, I mean, a lot has happened over the last couple of days, so that certainly makes the environment much more unstable. The honest answer is it's really very difficult to tell right now. Every conversation that I've had over the last 3 days is that VC funds that have already made commitments are following through with those commitments. If they haven't made a commitment and they were only in diligence phase, they're generally putting their pens down. That's sort of very anecdotal, what I'm hearing. When I talk to potential LPs, I hear a very similar message. It's that until there's greater clarity on what's going to happen geopolitically and geoeconomically, they are not inclined to take new deals to their investment committees. What that means is we'll have a better sense of what might happen during the course of this year in a month or so. But right now, I'd say it's very difficult to tell.
Do you think there's a difference between the sentiment among foreign LPs versus MENA LPs? Murtaza can take this, and maybe Sonia would be a good person to also take this.
So the source of capital is certainly different, and that does drive a change. Um, I don't want to pick on particular sovereigns, but given their source of capital and what's and the nature of price changes in oil, I think what we're going to see is a slowdown in investing activity from the sovereign perspective.
I think sticking to the question of MENA LPs, I mean, if oil prices are going to be sticking the way that it is now, especially in the last 2 weeks, I think there's been a lot more volatility. There's some expectation that oil prices are going to stay low for at least the near term. How do you think this is going to translate into kind of risk appetite for sovereign wealth sovereign wealth money into what is essentially high risk asset investing, into VC and tech? Do you think it would change the perception of risk and a deployment into, tech generally?
So from our experience with the sovereign wealth funds, the amount of capital that's going into this ecosystem of VC is a drop in the bucket, compared to the size of these funds. And they have spent so much time and effort into building the local ecosystem and to become considered tech hubs globally. So to stop that funding, it doesn't make sense because it's actually a small proportion of their overall, funds. So I don't see it slowing down in terms of funding the VCs, but the VCs ourselves cannot rely on the sovereign wealth and developmental capital for our funding forever. So eventually it's not going to be it's eventually going to stop.
The only thing I would add is that it might force a reallocation from international to local. So from that perspective, it's not necessarily going to have a drastic impact on the scale of local investment they're making, as Sonia says, but they might stop doing that in the US or in Silicon Valley or in Europe and call back those commitments and reallocate them to local commitments.
Or could we even expect perhaps a little bit more stringency or, kind of, how do you say, granularity in terms of the expectation for VC tech to come out of this ecosystem? I mean, just because of what's happening kind of globally, do you think that this is something that could happen? I mean, I guess in the past it used to be a bit more of a free check, but these days, I mean, can we?
I think the ecosystem is sufficiently nascent that the opportunity is enormous. I think the environment and the nature of investing in this ecosystem is somewhat different to the West Coast and the US. In the West Coast and in the US, what you're seeking to do is predict what the future might look like in 10 years' time, and the cone of probable outcomes is enormous, and you'll deploy a lot, and you'll have a parallel distribution of returns, and a few of your companies will do extraordinarily well, and many of them will go to zero. I think that's not quite what's going on here. Over here, there's still an enormous amount of opportunity. You can look at a future that already exists in other parts of the world and invest in companies that are building that future in this market. And so I don't know if I'm answering your question, but to my mind, what that does is it gives you a higher degree of confidence in the returns that you can expect from investing in this ecosystem, and therefore a higher degree of confidence that the larger pools of liquidity will keep allocating to this ecosystem.
Maybe next question for Jonathan, since, Antler, you guys see a lot of deal flow coming through the region. Could you just kind of give us a bit of a big picture view over the last few years? I mean, since Antler started, it's just been, how many years has it been since you guys started at MENA?
So it's 7 years globally. And the MENAP fund here was started a bit more than 2 years ago.
2 years, okay. Since 2 years, so it was 2025, 2023. Okay, so this was like post-market correction. Yeah, could you give us a bit of a sense in terms of the evolution of deal flow in terms of volume and quality?
So the Antler doesn't really have deal flow per se, because Antler creates their own deal flow, right? The business is always, our deal flow are individual founders that want to find a co-founder to build a business. So that means there is no startup, there is no pitch deck, there's no deal flow. And I think when we think about the region and the difference, obviously we see this always like from a VC perspective, capital perspective, but the business that early stage, and especially, for example, funds like Antler are in, is what is actually the ecosystem, how many founders are actually around, right? And are there enough people that actually can build good startups? And what we heard also on other panels before is that valuations in the region are always high. And I think there's a very simple explanation is that if there is a great deal, everyone is jumping on it and there's a lot of money that needs to be deployed. And that's why these deals can actually have these valuations. So there is a scarcity of founders still, and that comes purely also by the age of that ecosystem. And I mean, now we obviously have the first unicorns and we have the Kareems and we have the Tabbies, etc. And there's more and more startup founders, second, third generation that comes out now. And that's like funds like Antler are banking on that, obviously, then to have these founders to say, no, I want to start my own company, or I started something and I want to start something again. And what I can only say, what Antler sees globally over the last couple of years, or what I've seen is that the number of applications of individuals is per year now on 180,000 applications, individuals per year, Antler globally. And here in the region, every cohort that Antler is doing, there's more and more applications that are coming in. This is a good sign for the region because it means there is more and more individuals and potential startup founders that want to build a company here. And I think that's very, very important. And I think also that whatever happens in the world right now, this is not going to change, right? People want to build businesses here. People see opportunities here. And there's hopefully more and more founders that either way decide to start their business and they're already in the region, which obviously we see a lot. Then people from the countries that are neighboring the region that are coming here. And there's also people globally. And I think that's actually a massive chance for the region, especially when we look at the US and what's happening there. I think there's a lot of potential of really, really great talent that says maybe the US is not the right place for me anymore. And maybe I'm actually starting something in the Middle East. And I think that's a massive opportunity for the region. So my angle is always very early stage. My angle is always, where are the founders actually coming from that building all these businesses? Were they here before? Did they start something before? Did they work in a startup? Where they coming from? Obviously, a lot of founders are coming from Pakistan. And from
Give
Egypt
us a
and
bit
India.
about like a geo background, like in terms of when it comes to startup deal flow, talent, particularly the area of talent, right? I think in the last 2-3 years, we've seen a lot of not just capital migration, but also talent migration over to the UAE and various parts of the Middle East.
Yeah.
I know 2 years is still a bit of a short time, but have you been able to detect any particular trends, whether in terms of talent sector, the direction of where they're heading?
So I'm in the region I live in Dubai for 8 years now. And me personally, I see a massive difference in what people live here today versus 8 years ago. And I think we see definitely an increase in people that are potentially people that build startups. I think 10 years ago, you had very different talent coming here doing very different things. And we see there's two things, three things actually. There's the people that are here for a time that maybe worked in a startup and now want to build their own startup. So they were educated in that area here in kind of a startup, and now they want to build their own. There is second people that are coming from like the near surrounding, like people that are close to the region, as I mentioned, Egypt, Morocco, Pakistan, India, Jordan, that maybe come to the UAE or Saudi, because these are obviously the biggest hubs to start a company. But they're already close to the region. They have some sort of link to the region. And that's a second kind of group of people that want to start businesses where the hubs are, where the money is, where VC is investing. And then we see a third group, and I think that's something interesting over the last couple of years that is increasing. It's a crowd that has nothing to do with the region. That's not true 100%. It's a kind of 50-50. There's people that have never been here that heard about, they see the opportunity, they see an environment that helps them to build something. So they come here. And then there's the typical diaspora people that say, I was in the US, I was in Canada, I was in Singapore, and I actually want to go back to where my roots are, and I want to build something because I think it's a region where I can start a company now. So these are the three major groups of individuals that actually want to start companies. And we see all of them growing. And I think that's what is very exciting about that region. And we need that. The ecosystem is still extremely small. It's extremely new still when we compare it with the US or Europe or Southeast Asia. So that's why we definitely see more and more people coming to the region that want to start a company, or as I said, people that are here that want to start a company. There is a change, and it will continue, and it's growing constantly.
I think when it comes to talent in this region, COVID has done a lot to make this region a place where people want to come and grow and build companies. When the UAE started doing these remote working visas, people started coming and seeing it. Expo, people started coming and seeing it. Anytime there's turmoil in countries around the region, people start coming to the region. The fact that this is a very safe place to grow, to live, in our space in VC, there's a lot of government support and encouragement in this region. So it has made this place a hub for talent. The issue is the cost of that talent is very expensive. So for startups to afford a lot of this talent that comes in, like the cost of living in the UAE, it's very expensive. So to afford this talent is tough for the startups. So a lot of the startups think, okay, can attract great talent to the UAE, but I can't, as a startup, afford to pay, UAE, Saudi like prices, or salaries. So you still tend to see, a lot of companies that are, let's say, starting in Pakistan, keeping a lot of their talent in Pakistan, but growing in the rest of the region because it is too expensive, this talent. And so that has been a struggle for a lot of the.
Yeah, you actually touched a point, which is I was literally going to ask the same question because, moving from Singapore to here, I was actually quite shocked at the cost of living.
Yeah.
And UAE is actually quite comparable to Singapore. And my first thought was, it's actually quite costly to be an entrepreneur. You talk about expat talent that is living here. Some of them may come from corporate jobs or whatever. Most of them are in their 30s, right? When you're in your 30s, you probably just got married, buying a house, probably got a few kids. And then you're not a local here, which means you can only stay here for a month. So the cost of being an entrepreneur in the UAE is actually pretty high. No matter what they say about, UAE being a startup hub and everything, I just don't know, like, are there any particular, how do you see that kind of moving, the evolution of that moving forward? Because I think UAE still wants to be kind of a hub for startup talents in it.
Well, you have programs like Hub 71 that is doing stuff for the startups to make it an easier place to expand to this region. We've had it for the company. They came from Egypt to the UAE, and they said they couldn't really afford to come into this market, or even just because you want to test the market, you don't know if it's a perfect fit. And if the cost of, entry is so high, it's difficult to do. But Hub 71 allowed them. They gave them like office space. They gave them visas for free. They gave them rent for free. They subsidized quite a lot in their market expansions, allowed them to actually come to this market. So that type of government initiative really, really helps. And there's not many markets in the world where you have governments that are saying, "Hey, come in here, and I'll give you free office space." It doesn't. So you have that in here, so that makes it a little bit easier. But it is a big struggle with company startups to afford the talent here. So they try to keep a lot of their dev talent, et cetera. Anything they can keep outside of the region, they keep it outside of the region. They have their necessary positions here, like people on the ground that they need to build that, to grow the company.
Maybe you can go to Pakistan now. How is deal flow, quality of talent, types of startups, and, just ambition of building in Pakistan look like over the last 2-3 years till now?
Yeah, I think our goal is to add a P at the end of MENA so that you keep reminding people that it's MENAP and there's a connection.
Angela did that, by the way. Yeah, guess who decided that? Teddy Emma.
Yeah, but you also needed somebody to live in Karachi for 4 years to be a champion for Pakistan. So, so I think there's a definite flow, and Mudassir and Kareem were the OGs of that model where I think if you really look at the Kareem expansion, it wouldn't have been possible if they didn't have that back end in Pakistan, right? Drastically low cost, nimble, scalable expansion. Obviously, once they hit a certain limit, they had to move outside Pakistan as well. I think what we're seeing right now is we're at the tail end of 2 very difficult years of bad macros and political instability. And we're looking at 2025 as year 0 in now the phase 2 or the next phase of hopefully 3 to 5 years of growth again. So the sentiment has changed on the ground. That's definitely happened, but money is still scarce. Just timing wise, unfortunately, the 5-6 major VCs that are based out of Pakistan are focused there. They're at the tail ends of their previous funds, or they're in the middle of raising their next funds. That'll happen towards the end of 25, early 26. So we'll genuinely start seeing checks in 26. And 25 is a dry year, but the sentiment on the ground has changed. Generally, it's more positive. So this is year zero, in my opinion. Secondly, this model is now pretty tried and tested of raising your, pre-seed or even seed round in Pakistan, earning a few $1 million there, validating product market fit and all of that, scaling fairly aggressively, but you're always discounted by outsiders as a Pakistan-only play. So if you're doing 30 million in GMB in Pakistan, you get a valuation discount of 40% from any outsider. But if you can add on a Saudi or a Dubai or an Egypt or any other market, then immediately you're at least at 80% of what you should deserve, right? So I think that model is fairly tried and tested, even within the Endeavor universe. Postex is an example. They're the second largest courier / e-commerce fintech in Pakistan. They're expanding into Saudi. They're expanding into Dubai. Abhi, the fintech, Umair was on stage earlier. They headquartered in Abu Dhabi. Now they're expanding across the MENA region. So I think, especially for Endeavor companies that are at a certain scale, I think this is a standard playbook that validate cheaply in Pakistan and then quickly expand into MENA, raise your next rounds from there, and then obviously keep growing in Pakistan. But, the region is the ultimate goal.
I think, like times of crisis usually builds a lot of resilience into founders, and which is probably why I think Pakistani founders are also known to be really tough.
Right.
Because they've weathered many storms, in their many, many years. How do you kind of see that play into, like, especially when you talk about, the time to achieve product market fit, validating your product? Do you see a compression on that time to, that particular time period where they achieve PMF? That's one. And especially now with AI, I think what we're also beginning to see is that AI is really compressing that even further because there are tools that are available. Could you kind of paint that landscape a little bit, especially how AI is also transforming the way founders are thinking about building and scaling companies today?
Yeah, I think that's an interesting question, and I'll pick up on something that Omar Zabit said in the previous panel, right? Pakistan right now needs to solve some of the very basic and boring problems. So that predictability in that market is actually an advantage because you know that the basics need to be covered. You're not going to be getting fancy AI groundbreaking companies coming out of Pakistan, or if you are, there'll be a rare exception to the flow that's happening, right? So the basics are there to be solved, and now you can execute really quickly with cheaper execution because of AI, faster product market fit, faster product cycles. And the people who are going to do that have it laid out in front of them. You validate in Pakistan really quickly, and then you expand in the region, right? So that playbook is really, compared to other markets, much simpler because the problems that need to be solved are also simpler and quote unquote boring. So that's how I see it.
If I can add something, I believe that, so I obviously know Pakistan quite good, and especially the talent. I worked there for quite some time, and I think fantastic talent comes from Pakistan. And there's always a struggle, and it's not my first Paklaunch panel, and there's always a discussion around like, what are the startups doing in Pakistan? Are they like building for Pakistan or building out of Pakistan or testing and then moving somewhere? And I think AI actually offers a massive chance to Pakistan and the founders there because you can build 100 times faster and 100 times cheaper. And I think you can actually build something out of Pakistan for the world without raising millions of dollars and without it taking you 2 years, right? You can do something that you did before in 12 to 18 months, literally in a month or two. And you can do this with like 5% of the people that you needed before. That means you as a founder, if you say, I'm a guy that understands tech, and I mean, you also don't need to understand as much tech anymore to build an AI company today. You can do that out of your living room with like maybe a group of people, and you don't need $1 million to do that. I think it's a massive opportunity now with the tools that are available, that actually countries like Pakistan and the talent that is there, the smartness there, the willingness, the drive that you talked about, that they're actually building something, models for the world. And I think that's the new wave that we're seeing. Obviously, we have Disrupt that is also like trying to build more in that space and faster what they have proven already, which is a great example. And I think actually there will be more and more companies coming out of the situation. So I think AI opens a massive opportunity for me. AI is actually not only the part of like you build a new AI business and it's an AI business. I think what we completely will completely change now. I think it will have a massive impact on the VCs and how to evaluate companies, because it's about the how companies are built now. We see this like Lovable, for example, they have a 20 million ARR like in 2 months, right? So, and we see many of these companies, 3-4 people that have like 50 million ARR that took you 150 people before. VCs, I think, will also need to adjust massively to understand what's actually happening. I think most of them haven't understood actually what's happening. And I think it's a massive opportunity. So I think on your question with AI in Pakistan, not only the businesses, like AI business, but the way a business is built, I think we will see a massive opportunity. And I hope that some fellows in Pakistan will use it.
100%. I mean, I think it's a double-edged sword, right, when you talk about AI, right? Because essentially, I think some Altman has said this before. I think we're entering an era now. I think the next year or two, we're going to see a couple of these companies in, churning out millions in revenue, and it's like a team of 2 or 3, that sort of thing. I don't know if you're at the early stage. Have you seen any that come through your pipeline yet? Are you expecting some of that? Because I think the question also, and this was covered by, I think if you guys know Sandana's very big fund of funds, they were sharing about how, do we even need seed investors? Because if some of these, early stage seed founders are going to be raising such little capital because it's so easy to scale, you're achieving product market fit, everything so much faster, you essentially don't need seed investors anymore, which is a very existential question for them to be even asking themselves, right? I don't know if we have really thought deeply about what this means to the entire VC industry, not just to founders, but we'd love to hear what your thoughts are.
Yeah. So I left Antler a couple of months ago. So it was a bit before the wave maybe. And again, also the model is a bit different. But obviously I'm looking a lot into the market. As I said, I'm building myself in the AI space. So I definitely believe, and that's what I mentioned, that the way we invest in companies will dramatically change. I don't think there will be a seed round and then there will be pre-Series A, whatever Series A. I don't think this is going to... And funny enough, I don't know if the seed round will actually fall over or if the Series A will fall over. I think both is possible. I think there might be companies that raise a little bit in the beginning and then never raise again. And I think that VCs don't see that today. I think there will be a dramatic change on how companies will be built. Sam Altman himself said he's waiting till the one-person company is $1 billion company, is a unicorn. I think it's absolutely doable. And there will be massive disruption happening. And I think this will affect also the VC space and how we invest. So yeah, I believe, but as I said, like, I don't even know if it's the seed round that will fall over or actually the Series B or C, because these companies can also be profitable very fast. Depends also on the business. Not everything will be AI today, but the way that businesses are built and the way that they will be financed, I believe will dramatically change in the next couple of years.
Okay, one last question. Maybe Murtaza can take this before we open this to questions. So please ready your questions. You just maybe set aside 5 minutes for that. Yeah, there's been a lot of volatility and uncertainty over the last 2 weeks, especially with Trump tariffs. Oh dear, I lost my train of thought. Let's move.
No problem.
Yeah.
Oh, while you're doing that, what I'll say is, you're right. Like, I mean, investing will get disrupted. Like, where I see it going now is that the seed investors in the short term will, of course, continue to exist. The bar will just be a lot higher. The expectations will just be a lot higher for what an entrepreneur can do with that seed investment. And if you follow that train of thought, it's that Series B and C that starts to fall away, right? It's sort of, whether it's a college student or a returning founder or someone spinning out of an existing tech company, they'll probably still need that seed round just to get the sort of minimal fixed costs up and running. Once you've got that, the amount that you can build is exponentially larger than what might have been the case a few years ago. And then it's sort of like investors like me who are sitting there at the Series B and C stage might just not see those companies. And that's the existential risk.
Sorry, question was about exits and IPOs.
Yeah.
Favorite topic for everybody, everyone, yeah, every VC needs to know this, I guess. Yes, especially in light, I think, of the last 2 weeks. I think generally when I speak to a lot of investors, it sounds like everyone's kind of hitting pause. I think we've seen a couple of IPOs, Klarna included. They have also called off, at least temporarily, some of the IPOs. How do you kind of see that shaping up?
Yeah, sure. So like the entire backdrop, I mean, when we're looking at investing in companies globally versus regionally, there is a little bit of a different dynamic, especially when you're underwriting to the kind of exit you might seek to expect. When you're investing globally, the only way you can really build a successful, scalable, sustainable investment strategy, specifically at the growth stage, is if you're underwriting to a US IPO. You can hope for and target secondary sales and strategic acquisitions and M&A, but fundamentally, you're underwriting to a US IPO. In order to become a company that can go public in the US, you really need to be a $10, $20 billion company. You can't afford to be a micro cap with a small float. You still need to be growing at a steady state of 20-40% year on year. You need to have positive unit economics at the very least. You need to, all of these things matter, which is why, even a 10+2 fund life is often not enough. When you're looking to invest in companies regionally, I think what many people have alluded to is that international investors haven't cottoned on to the fact that the MENAP region represents a particularly unique opportunity because you can invest in proven business models, incredible entrepreneurs, large markets, little competition. All of this is true, and which is why all of you are doing it, right? And then when you look at the other side of the barbell, there's nowhere else in the world where you can underwrite to liquidity within 2 to 3 years. And if you're building in this region, particularly with the Saudi nexus, you can do that. That window of opportunity might not exist forever. In fact, it certainly will not exist forever. It's maybe a 2-3 year window. But you can underwrite to liquidity within 2 to 3 years. The Tadawul Stock Exchange is deep, right? There is a wall of liquidity, both retail and institutional, that is eager for paper, and in particular, technology paper. And IPOs on that stock exchange. There was an IPO a couple of months ago, a D2C company, which was 200 times oversubscribed. So that's a backdrop in terms of exits in the region and the way we think about it. How are they going to change given what's happened? Again, I'll go back to the very first thing that you asked, which is I absolutely have no idea. I mean, the Saudi Stock Exchange dropped, I think, 8% on Sunday, another 6% on Monday. I mean, it wasn't fun. But that doesn't mean that those investors that I alluded to aren't sitting there waiting to invest their capital in public paper. And I think that'll continue to be the case for the next couple of years, barring exogenous events.
Ooh, we're really worried. And it's as you're saying, Tadawul is now making it amazing. We've got the question that keeps coming up in this region is where are the exits? We're finally in a position where we have a lot of companies that are coming out and marching towards IPO that are exitable. We hadn't had a lot of those in the past, and now between the funding that's come in, the talent that's grown, and the market opportunity, there are now great companies that are marching towards exit. And this is potentially the year Tabby's supposed to IPO this year. With the market fluctuations on a global scale happening the way they are, and the uncertainty of the markets makes you quite nervous as any one of those companies that are marching towards an IPO right now had under this, if this Trump era was not happening, we'd be like, okay, great, we're finally at a place we're getting IPOs, we're going to get these exits. The world will see that, you can get exits here and then more capital is going to come in. And, we can prove that the cycle works in this region. And, it might just delay. It will get there and the markets will stabilize and, the world will settle. But it might just delay some of those exits that people are waiting for here.
Cool. Let's do Q&A. Any questions from the floor that you may have for our panelists? If you do, you can give a little wave. Nobody?
I think let's move.
Let's wrap. Okay, let's wrap.